You have no idea how often I'm asked about interest rates. Yep, every single day. And especially now because we're in what I call a declining interest rate environment. However, the feds, as we know, dropped the rates just a little bit, a quarter of a point a couple weeks ago. And there was a slight decline in rates, and then they kind of went up a little bit. Why did that happen? Well, the feds get together, they all chat, and when they decided to roll out this and make their reasoning for maybe a December decrease, they said, well, we're maybe not going to do that. So that kind of ticked up the rates when it came to actually what we all pay for mortgages, right? And we're going to just talk about mortgages right now because I don't sell cars, I don't sell furniture. I'm in the real estate business, all right? And I help people buy and sell real estate. So, because of that information that comes out of the Fed, the traders out there that kind of trade these bonds, and they look at those bonds, when they're looking at lending money, and they kind of add up margin to it. So right now we're kind of seeing interest rates about 6.125%, 6.25%, almost 6.5%, depending on credit, your down payment, things like that. So if you want to really understand this, I'd be more than happy to have a conversation with you in person, of course, or over the phone, maybe even a Zoom call. But if you really want to know more about how interest rates are heading, if you're thinking about buying a house and want to get a little grasp on this so you know you're making the right thing, I encourage you, talk to your favorite lender. If you don't have a favorite lender, I will get you one. All right, let's connect.